How much would it cost for Uber to hire me back to drive? Hey everyone, this is Kevin the Apptrepreneur, and no, I am not looking to go back to Uber and Lyft. Guys, I don't know if you saw the video over the weekend, but I put just a hair over $1,000 into Dogecoin. It skyrocketed, I cashed out, and I claimed over $14,000, 10 of which will roughly be profit after, the initial investment came back, and there's going to be a couple $1,000s in capital gain tax. But guys, I made $14,000 in a few short months. I mean, look, I really don't care who's the number one side hustler. I really don't. But come on. Who is the ultimate side hustler here in the gig economy space? Just saying. And you can do it too. Sign up for Robinhood, Portfolio, a Public, Coinbase, Stash, whatever. Start saving, start investing. You can do what I do. But here's the reason I'm opening with that. Not only because I want to brag a little bit more. I mean, it's just fun. I mean, I'm just on sky. I'm in cloud nine. What can I say? I'm on cloud nine because of what happened over the last week. But not only do I want to brag about that, but it is a question that is now being asked by shareholders. Now, I don't know, since we are talking about investing, let's go over to the stock of Uber and Lyft, and let's look at Uber. And you can see over the last month, it has dropped $13.15, roughly 22% of its value. Go back 3 months, and, well, it's dropped 25%. Go back a year, well, I mean, it seemed to be on the path to recovery, especially after the election, but now it's getting down to bad levels again. Now, what about Lyft? Lyft, in the past month, has dropped about roughly 18%. It dropped roughly $11. Go back 3 months, it's dropped 15%. Go back a year. So Lyft was definitely on a recovery road at one point. This was the lowest they'd been the last year. But now look at where they're at now. They're getting right back to where they started. Now, why on earth is that happening? Well, there are two key stories on why this might be happening. The first is that the U.S. Labor Secretary wants to investigate the matter on whether or not gig workers are actually employees or not from companies like Uber. In fact, here's the Labor Secretary, Marty Walsh, and he said, and I quote, "These companies are making profits and revenue, and I'm not going to begrudge anyone for that because that's what we're about in America, but we also want to make sure that success trickles down to the worker," aka they're going to be investigating whether or not Uber drivers should be employees. And if he decides they should be, legislation might be put forward that ultimately nullifies Prop 22. Maybe. We'll see what happens. But here might be the bigger reason. There's a second reason, and that's because in the UK, Uber has finally been forced to classify their drivers as employees, and congratulations to those drivers. I know I'm going to get a few of them saying, well, I don't want to be an employee. Well, shut up. With all due respect, shut up. You are an employee. You're just not being paid like an employee. Again, unless you can actually see the destination ahead of time, and unless you can set your own prices as well as being able to clock on and off whenever you want, then unless you can do those things, you're an employee. If you can do those things, then yes, you are, strictly speaking, an independent contractor, but shut up, you're an employee. And, well, UK made it official, and Uber basically gave up the ghost. They said, all right, we give up. We throw our hands in the air. We wave the hyperbolic white flag. We do all these things. We will pay them as employees. And, well, investors, well, they got to look at what the cost of doing that is going to do, and guess what? They don't like it. So here's an opinion piece from MarketWatch. Uber Technologies has spent and fought to keep its drivers from becoming classified as employees instead of contractors, and investors finally got a glimpse of the financial reasons on Wednesday. Uber broke out $600 million from its total revenue of $3.5 billion to account, quote, for the resolution of historical claims in the UK relating to the classification of drivers in its first quarter earning results. This is a direct result of a UK Supreme Court ruling in March that led Uber to classify tens of thousands of drivers in the UK as employees. Uber disclosed in March that it could have to pay claims of back pay due from British drivers in the case, including holiday pay, wages to equal the minimum, and potentially pension contributions. This would be on top of what the company already paid the drivers in the 2016 case. That puts a dollar figure on a long-standing concern about Uber and the other gig work companies. What it would look like financially if they had to treat drivers as employees. And it is nothing to sneeze at. Blowing away the $200 million Uber and other gig companies spent to pass a new law in California in their quest for a third way for employment law. That win could be moot, though, as President Joe Biden's new Secretary of the Labor Department said last week drivers should receive the benefits of employment in most cases, spooking some investors. Uber shares initially went higher in after-hours trading Wednesday after the company papered over the accrual and continuing losses with the $1.6 billion sale of its self-driving unit. Keep in mind, the self-driving unit was the main reason people were investing in Uber. They thought that Uber claimed that they were just around the corner, and they said that we will be having driverless cars on the road in 2 years. They said that roughly 6 years ago. And when they sold the unit, they basically said, nope, we lied. We got you all to invest in a pipe dream. And they cashed out. And, well, I mean, what reason is there to invest in Uber at the moment? But fell back to a 4.8% decline in the extended session as executives discussed increasing costs for drivers and faced an immediate question about Labor Secretary Marty Walsh's comments. We already read this comment, but the company's mantra when asked about the possible cost of classifying its drivers as employees has been to say that they will pass on the cost to its users, which executives said again during Wednesday's call. Now, this is an interesting thing because here's the thing. Keep in mind, Uber keeps the costs low for a reason. They keep the costs low because when they keep the costs low, you get paid the least amount of money, passengers get a bargain, and Uber collects most of the profits. It's a win-win for Uber and maybe even the passengers, because here's the thing. Taxi rides are not cheap. If I got drunk at a local bar, and I won't do that because I don't drink. Finally had my first taste of non-alcoholic beer on Saturday though, and yeah, not really my thing. Just not my thing. But anyway, a taxi cab from that bar to my house would probably be somewhere between $25 to $50, and it's just a few miles away. In contrast, a Uber and Lyft ride, depending it's not surging, of course, would be $5 to $15. It's a major drop down. However, if Uber only has to pay that driver $3 and they're keeping the other $9, or whatever it is that they charge for it, well, guess what? Then Uber's making out like a bandit. And keep in mind, Uber doesn't have to pay for the cost of the car, the gas, or anything. That's being passed on to you. So in that situation, works great for Uber, works great for the customers. For the drivers themselves, not so good. But anyway, and here's the reason why they don't want to pass costs along to consumers, because Uber could have raised the prices a long time ago to pay their drivers better, but it doesn't behoove them to do so, because if they raise their prices, then they are officially again competing with the taxi industry, and they don't want to do that. So, they raise the prices on their Uber rides. People might be less inclined to use Uber, because if you're the same cost as a taxi, well, shoot, taxis hang around the bars all the time. They know their customers. You can hop into a taxi and guarantee you will not get hit with a surge price. Let's continue. They noted that they did see a slight increase in costs in the quarter because of driver benefits, and they were able to pass those costs onto the riders with no impact on demand. Quote, "We are leaning in with investments to support the recovery mobility and growth initiatives and delivery," said Uber Chief Financial Officer Nelson Chai, noting that the ride-hailing company plans to invest in its driver base and increase its spending in general, marketing and administrative costs, and in R&D. Chai estimated Uber will spend between $450 million and $480 million in the second quarter after a drop in spending last quarter, which there was no reason to actually do because people weren't going anywhere. Also included will be spending on marketing to attract new drivers as it faces driver shortages in the U.S. and Mexico. At the same time, China noted the company continues to face, quote, significant forecasting uncertainty in predicting post-reopening consumer behavior. Wedbush Secretaries analyst Dan Ives said that investors were not happy with the higher spending and pointed to the UK charge/accrual as highlighting the hot button issue of possible further regulation over the classification of drivers. Now, I've said in an after-hours email, higher level of investments near term coupled with some uncertainty around the forecast. It was a robust print, but after the Biden move against gig players, the street is very nervous around Uber and Lyft, with selling post-quarter a theme commonplace during tech earnings season. So here's the thing. Here's what's going on. Here's why investors are spooked, for lack of a better word. They are spooked because Uber has officially set aside $600 million to cover back payments for misclassification of their drivers. Now, some might say, okay, but that's like a one-time thing. They're not going to do that again, right? Well, here's the thing. That's roughly what Uber suspects it will cost to pay drivers for their time. Now, keep in mind, I don't know exactly how far that goes back, but you're looking at potentially more than $600 million going forward, because that's just a settlement amount. The actual amount to pay drivers a living wage, benefits, a pension, all the vacation time, all these things cost money, and they will cost a lot more money. Now, Uber might have to slim their belts a little bit. They might have to keep less drivers aboard. They might have to charge more for the rides. In that sense, Uber and Lyft become just another taxi service. And once they become just another taxi service, then the idea of them being the next trillion-dollar company or whatever their lofty goal was isn't really in reach anymore, because taxis have been around for a long time and people basically just didn't use them because of cost and inconvenience. Now that's where Uber and Lyft have an advantage. Uber is a much better product than a taxi company. It's, you open the app, you call the ride, tells you where it goes, shows your face, it shows their face, shows names, the famous say my name safety measure. And for that reason, even if the Uber and the taxi cost the same amount of money, people would probably still gravitate towards the Uber because it's a more personalized experience. But people might not use it quite as much as they did. A lot of people, my cousin Shane, for example, sold his car and he just Ubers everywhere in Washington, D.C. Now, that's fine. He lives in an apartment. That apartment is only a few miles from the White House. That's where he works. That's where he's worked for a long time. And he just Ubers. And for him, that's fine. Doesn't have to deal with a car payment. Doesn't have to deal with insurance. But the average Uber trip costs him $8, maybe $10 on a bad day. But what happens if drivers are employees? He might have to start scheduling the rides. That's a little less convenient right there, but still workable. But now, what if the average ride costs $20 to $25 because now Uber has to own the vehicles and pay the driver's benefits? Well, that's like $50 a day. $50 a day, 7 days a week is $350, and you can start doing the math from there. It gets rather expensive. Maybe the car payment, if you get like a little commuter car that has like, a $150 monthly payment because it's old and used, but it works fine, maybe that's now more appealing. And investors don't want to hear that because it means people are now going back to buying cars and they're not driving Uber as much, or they're not riding Uber as much, I should say. So this let's go back to this opinion piece right here. This 600 million, that's a scary number for investors. Because let's just even say that's like, what if that's what they're spending every couple quarters in America or the UK? What if like 600 million is what it costs, in America, in UK? What if there's like another few hundred million in Japan or China, wherever they are? I don't think they're in China anymore, actually. But, this number can only go up. I mean, Uber wants to be a global company, and to be a global company, they might have to start paying their drivers like employees everywhere. Now, of course, places like India and stuff might not get on this case, but the bottom line is Uber's costs are going up, and there's no certainty that they will ever be profitable. And if they have to start changing the business model to be more like taxis, well, they might still make money, but then a lot of taxi companies are not public for a reason, because they don't want you to know how little money they actually make. So, look, here's the thing. My opinion, it's best to get a 9-to-5 job flipping burgers and putting some of that money away into crypto or stocks or gold, whatever. Start investing in yourself in the future. Don't invest in this company. I don't think that they could pay you enough to make it worth your while. And it sounds like, they're not going to have a whole lot of money to pay you either. So who knows? Maybe this is the upcomings that Uber deserves. And for those of you who say, well, look, if they just turn back to the multiplier, they're never going to turn back to the multiplier. They didn't want you to have the multiplier to begin with. And tweeting to Dara Khosrowshahi is not going to change that. If you're really unhappy with that, you just need to quit. Anyway, that's my opinion on this topic. Tomorrow, who knows what I'll talk about tomorrow. But I would like to know what you think about this one. Are you still driving for Uber? Some of you still are. What would happen? Do you think this is actually going to happen? Do you think the Secretary of State is actually going to go after Uber? And what do you think Uber's response is going to be? Because they're playing all their cards. They don't have a lot of cards left to play, and I think reality is just finally catching up with them. But what do you think about that? Comment below, like, favorite, share, subscribe, and as always, flame responsibly. Have a good one.